I'm going back to basics today with something that is a constant question and complaint we're getting right now about auto insurance and the massive premium increases. So what do you actually need to have with your auto insurance? So the auto insurance market is in turmoil right now. People are seeing gigantic increases in their auto insurance premiums. And in many states, the odds that you're going to get hit by somebody who's not carrying insurance has gone way up because the premiums have gotten so high. A lot of people who prior had auto insurance aren't carrying it anymore. So what do you do about this? I mean, obviously, we've talked about how people are shopping more than they did before. A lot of people just renew with the same company year after year after year after year. And so when you do that, you're competing with yourself. I mean, you have no idea if what you're being quoted is okay or not. Well, the very large increases many of us are receiving has made people more aware. And I was reading a report in Barron's about the auto insurers, and believe it or not, they're not being robber barons. It'd be so convenient and nice if we could say that they were being bad guys and ripping us off. But do you know that most auto insurers are running the equivalent of charities right now? They are taking in a certain amount of money and paying out significantly more in claims. And for some of the insurers, it's unreal how much more they're paying out in claims than they're taking out in dollars. And so the insurers are like, what are we going to do? And so they have been pushing the rates up. Some states more than others. Some, insurance is regulated by the states. And some states allow an insurer to charge what's called at market, and others, they have to go through this rate setting process and all that. So it delays the ultimate higher prices, but the deal is prices are headed higher, but not the same with every insurer, because different insurers calculate risk differently, run more efficient operations than others and things like that. So what you're quoted for what you get could be very different depending on who you're with. But going without or buying minimums can be very, very risky. So let's talk about what you got to have. You need to have liability, particularly if you have any assets. Because if you don't have good liability coverages and an accident is an oops, it's your fault, you can get wiped out. And I've shared stories from time to time of wealthy individuals who got cheap, bought state minimums, and ended up bankrupt because they didn't have sufficient coverage for a judgment that would come later. So you having liability coverage is really key. And although the terms will vary from state to state, having uninsured and underinsured motorist coverage on your auto insurance, that's something you really need, because the number of people without insurance and the number of people buying at state minimums is going up, meaning that even in an accident that's not your fault, you could have significant cost exposure because they're underinsured or uninsured. Now, I just said things you have to have. But then there's a question, should you be insuring your vehicle or car or truck or whatever you want to call it for the value of the vehicle for collision? If the vehicle that you have or car is really old, then probably not. Because the value that the insurer will pay you for your car could be so low that the premiums are not worth it. The traditional formula is when the premiums for collision exceed 10% of the remaining value of the vehicle, which you can look up online pretty easily, get a wide ballpark estimate, then you're best off being your own insurance company for the car if it ends up being totaled and it's your fault or you get hit by an uninsured person. And that will cut some cost out for you. In that case as well, comprehensive if you have an older car. You may not want comprehensive either, which pays for things that happen that are not actually in an accident. Tree falls on your car, who knows what. So what I want you to do, if you can, is raise the deductible on your auto insurance. If you are carrying collision comprehensive, have it higher, because that will have a direct impact on premiums. And the insurer can quote you, or if you use an agent, the difference in what your premiums would be on a monthly, 6-month, or annual basis if you raise the deductible. Just make sure if you have a loan on your car, it's never higher than what's required by your lender. They may say you can't have a deductible higher than $1,000, or you can't have it, that would usually be what it is. I can't imagine one having it. It can't be higher than $500. There will be a break point where it will be definitely to your advantage to have that higher deductible, because you don't want to make small claims anyway. And once you figure out what the coverages are you should have, that's when you can really do some good work shopping with various insurers to see where your coverage is going to be. Good news, following an accident, the long waits people were having getting repairs, those have really shrunk a lot, not to normal, but closer to normal, back to more like they were before 19, not like they've been the last few years, when it could take months and months and months to get body work done to your car after an accident.